Hi, my name is Anushrista. My student ID is EMV80670, and my topic is about Woolworth company. In this topic, it gives a clear understanding about the cooperative accounting for income tax issues. The report is based on Woolworth groups to report defined in the various concept of accounting used in the financial report of the certain financial year and its priority year. It also discussed the recognized criteria of different tax assets and liability in liability. It will also discuss the reason of different income tax expenses shown in the income tax statement and the class 4 statement. Uh, we'll go through the introductions part. The report will discuss the certain concepts used in the cooperative accounting for the income tax, such as accounting profit, tax profit, temporary difference, different tax assets. This report will also define how to compute out the timing difference and its natures, whether a temporary difference or a permanent difference, along with this treatment in the financial statement of Woolworth Groups, which includes a balance sheet, cash flow statement, and income statement. Going throughout the detailed informations of accounting concept, as we already mentioned, that there is accounting profit, tax profit, temporary difference, taxable temporary difference, deduction temporary difference, different tax assets, different tax liability. So to go through it, it includes the detailed informations of those. For accounting profit is the net income reported in the financial statement, where net income calculated by the subtracting the split cost from the revenue earned by the identity for the respective financial year. The accounting profit for Woolworth Group is reported for the year 2019 is $2,227 million. Such accounting profit is calculated after deducting all the operational costs, administrative costs, and so on. It is consolidated profit owned by the company and its associate company. We go through about taxable profit. It is calculated by the adding back all the non-allowing expenses in the accounting profit and then deducted all the allowance expenses. Temporary difference. This is the difference between the accounting income and taxable income, which will be reversed back or eliminated. Woolworth Group has recorded its different tax assets as 311 million because of permanent difference. However, does not recognize the temporary difference in its Woolworths group. Taxable temporary difference. The taxable temporary difference arises in the payment of taxes when the carrying amount of liability is settled or the carrying amount of an asset is recovered. Going to the deductible temporary difference, the deductible difference gives rise to the different tax assets when the cost is deducted from the financial statement preparing for income tax proposed but not while computing accounting profit. Different tax assets. These assets can be used to reduce tax obligations in futures. It is important to understand that a direct tax asset is only recognized when the difference between the impairment in assets or differences of the assets in the expected to offset futures profit. Woolworth Groups do also have assets in the expected to offset futures profit. Woolworth Group do also have recorded a different tax assets of 311 million, which is due to the temporary timing difference in the earliest years and has increased in the current year taxable profit to 730 million from 699 million. Different tax liability is a tax which is assessed and payable in the current period but has not been paid yet. The difference arises from the timing difference where tax accrual and tax period at different profit of time. For instance, the company recognized the direct tax liability on the difference between its accounting earning before tax and taxable income. Going to the detail regarding the recognitions criteria, an important criteria is to consider whether a different tax asset is to be recognized or not in the expectation so that there will be the taxable profit in the futures. If the carrying amount of an asset is less than its tax base and the difference gives rise to the different tax assets in the respect of the income tax that will be recoverable in the futures period. Company expenses. The tax expenses of the Woolworth Groups reported in the financial statement for the 2019 and 2018 are 668 million and 718 million respectively. Distributed the portions of the tax expenses to the holding company is based on the allocations approach. Also recognized has been done of tax expenses along with the rate of the income tax has preventing its respective financial year. The company has made all disclosure related to the tax representative in the annual financial report which is stated as correct. The question may also can arise that is the figure has the same as the company tax rate times your firm's accounting income and the reason for such difference. So for that, the company has recorded it is as current financials has 730 millions while considering with the statutory rate at 30% spring approximately 668 million. In registration, the above mentioned, the company has a net profit before tax comes to the 2,227 million, and after application of statutory tax rate of 30% it gives an income tax expenses of 668 million. Here the difference of the 62 million and is a temporary difference. It has been noticed that there are different choice accessible with the organizations to alter its laws either by the introductions of the DTA or via current forward or loss in the resulting year. Different tax assets or tax liability recorded and reason for such transactions. It's mild important to apprehend to make judgment and estimated regarding the criteria of DTA and DTL and the time frame inside which such provisions are created, carry forward, paid, or reversed. Woolworth Group has been utilization the taxable earning as much as the enlarged is far too had by mean of making use of the rate of profit tax for the reported financials year. So there are more questions according to that has the issues of tax income. It said that is there are any income tax assets or the income tax payable by the company and why the income tax payable is not the same as the income tax expenses. The income tax which is said via Woolworth Group is in the financials is 668 million unless the actual tax paid is 744 million. The distinction within the identical is due to the previous periods and recognitions of the temporary timing difference. According balancing amount is 27 million excluding priority period amount is different tax period. The distinctions is accounting and treatment of the transient timing difference is done otherwise via the standard and the loss government taxable. Thus, it is important to apprehend the adjustment below both accounting and the taxation. So, for the other questions that comes is the income tax expenses shown in the income statement the same as the income tax paid shown in the cash flow statement? If not, why is the difference? So for that, income tax fee and excluded is both cash flow and statement and the earning statement is obviously no because the cash flow statement refers back to the statement whereas in all the expenses paid and profit earned are covered. This statement does not no longer encompass an non-cash item which includes depreciation, extraordinary income or losses, impairment of property, charge payable of or property receivable and so forth because those fees are not paid out of the pocket of the agency at the reporting data. Timing difference versus permanent difference. A temporary difference occur while income or loss entered right into a book in a single period of the reporting and influence the taxable income for any subsequent period or being belonging to any period year. There may be several examples of the temporary difference together with sales income, bad debts, advantage income, depreciation charge, or prepaid amount. Understanding of the treatment of financial statement in relation to the Woolworth Group, the company has addressed about the introductions of direct tax assets and direct tax liability. It has been cited from the financial statement that they comply with the each standard regulations and law, and every entry acting in income statement are have given suitable effect in the prescription account head. So for the conclusion of this assignment, everything have it says that in conclusion, this report has addressed via various aspects of the financial statement. Additionally, it has also explained various account concepts such as accounting profit, taxable profit, temporary difference, different tax assets. This report also defined how to compute out the timing difference and its natures, whether temporary difference or permanent difference, along with the treatment in the financial statement of Woolworth Group, which includes a balance sheet, cash flow statement, and income statement. Various issues faced while computing and treatment the above concept has been captured in the report. Thank you for your kind considerations. Hope that my report have a clear understanding of the cooperative accounting for income tax issue. Thank you.